Welcome to the Digital Micro Trading Journal. I am Digital Micro, your host, and we're day trading for ROI prep for April 18th, 2022. Never a recommendation, opinion only. I'm just sharing my trade journal, and it's all about this episode is trading. 6 signs you're heading to the next level. So very important. If I would have known this 10 years ago on the start of my futures day trading journey, I think I could have benefited in 7 separate ways. So these are the 7 separate ways I think I could have benefited if I would have applied these 6 signs: make money, save time, and avoid effort. There's going to be effort, but at least be efficient with it and escape so much mental pain, emotional, maybe even sometimes physical. And 6, more comfort. And most importantly, with comfort comes mental and emotional confidence. And all of that adds up to better health. So for me, on the trading journal, these 6 signs that I've better applied in 2022 have helped me attain some, if not all, a portion of these 7 items. So let's go through the 6 signs. So this is number 1, especially for 2022, when in Q1, not until the last few days of the Q1 did I implement this. So big flaw in my trade plan, but I've since fixed it in Q2. Cash flow is king in business. You pay yourself at least monthly from your trading account. And I'm finding the more frequent, even twice a week, the better it is. Emotional, mental health comes from confidence that if you can scratch some money out and grind it out, you pay yourself first, and you do it when you make the money. And there's just this law of, again, we've talked about it in previous videos, nature abhors a vacuum, and you create a vacuum when you send money out of your account to your bank. And it's just a healthy thing to do. So that's number 1. There's different levels to number 2. Obviously, keeping a trade journal, that's the whole point of this video series I do once a week. And the main thing I would say that I've learned in doing it, especially after starting the posting on YouTube, is keep the consistency. Journaling is an evolution process, and it helps change going from one level to the next, especially because the details of how, when, and what categories of journaling that you do. So I have not just recently done this. I've been journaling now for several years. It's just that my journaling now is at several different levels of detail. And I find that when I study my journal, review the journal, and even just document the trades in the journal as they happen, it's really helped me a lot. So that's number 2. So these different levels of journaling, I'm going to put as number 3 is more of the bookkeeping portion, which is really hardcore bookkeeping numbers on ROI, return on investment, daily, weekly, and most importantly, which was number 1, the payout. If I'm wiring money or ACHing money to the bank, I want to know what that ROI is weekly. So I've got a gross ROI for the week, and then I've got a payout ROI, and usually they're not the same. So for instance, last week, I did about 68% of my weekly ROI on a payout, and the gross payout for the week was about 307 basis points. So 68% was a net payout. So again, that's just one example of 1 week. And again, that's part of the journal system. So what you measure is what you manage. So I haven't heard too many people on what are all the separate categories of journaling, but this has really helped me. Let's go to the next one. So number 4 has been an evolution. So I do have a checklist. Before, it used to be sticky notes. It used to be maybe I'd print out a couple of items, but now I've really formalized at least a 23, 24 item checklist. It's printed out, covered in a plastic sheet, and I refer to it, and it's very helpful. For everything that is on that checklist, I have lived and breathed in pain and good times and bad times. I've learned things, and I've learned to memorialize in a few quick words what the key parameters are for me on my checklist, and I look at it every day. I do it at the beginning, during, the middle, and the end. Very key here, and it's helped me a lot in 2022. Number 5, a subcategory of the checklist is a separate page with my AAA and AA setups, my best trade setups that I've learned through good times and bad, all kinds of different markets. What's best for me? What is best on a 24-hour chart versus a 120-minute chart versus a Hamarenko chart versus a volume profile? Again, I've got about 8 or 9 different setups, and they're all there printed out. I review it every day before the market opens. And if conditions are not met during the trade and the setup seems to be failing, that's a key thing. But again, this is a very big thing. I didn't have this before 2022, where all of my setups were printed out, and I just don't know why the heck I didn't do this earlier. So big change for me in 2022 by doing this and just being able to always refer to it and have it handy. Okay, risk management would be, again, another system, a subcategory in the checklist. And I want to really highlight this, even though it's number 6. Maybe you could put it number 1, which is a risk management system. And it's very critical because everybody's got their own take on what the risk management system is they're going to use, and depending on what the market condition is. But I got to say, for me, most of the time, I'm using a very systematic risk management system, and I'll put a link. It was in the last video that we did on Trim and Trade, and it's consistently used and reviewed on a regular basis, which means every trade, I review it, I look at it. It's not every time I'm going to make a win. I might have to scratch. I might have to take some losses. But overall, risk is always on my mind. It's not just about the reward. It's the risk and the reward. So Trim and Trade is my core. I've got it there. I've got all the specifics. So there you have it. These are the 6 signs you're heading to the next level in your trading. And you've got the 7 benefits that I mentioned before. So this is how my journal has helped, and I wanted to share that with you. Let's go to benchmarks. So a rear view mirror is not going to help us going forward, but I do like to at least have the benchmarks handy when we start Monday Globex, because it just shows where we closed the week at on the 3 major things that I like to follow. MES, S&P 500 down 2%. And notice the small caps did outperform. They got green, 40 basis points. And then Bitcoin right at that bull bear line in the sand, 40,000. So that's going to be key. We're not looking bullish here on Bitcoin, hovering here in the line in the sand. So a lot of people I know that I respect are calling for further erosion in Bitcoin short term. I'm not exposed to it on a day trading basis. I have, I think, maybe 3% of the total portfolio in there. So it's definitely a very small investment position, but I do believe in it long term. And if it were to go down, I'd probably be going into looking into a DCA, dollar cost average probability. But I'm not a buyer at this price, not at this level at this time. I'm focused on the day trading. And again, the M2K small cap Russell 2000 is where we're going to play. So this level 2000 is key. Let's go to the charts and check it out. So this is the M2A on the left blue. We've got the volume profile on Thursday. Good Friday, we were off. So Thursday here was this kind of pre-holiday session, and we closed here right at this high volume node. So not a big fan. I'm not going to do any business on this HVN level, but it is this 2000 level I was talking about. And for the whole week, you can see where people did business. So I don't really see an advantage here to have me a bias short or long. So I'm going to be super flexible. I'm going to see what Asia pivot does on Monday. And then also we'll see then when Asia closes, how we do in the Europe. And then again, transitioning from Europe to pre-RTH, regular trading hours. And then, of course, the big boys and girls on the RTH trade session. So Mondays are very critical to really get on the right side of the trade and size up in the right direction. And right now, this is a kind of a wait and see because I need price to break away from this high volume node. That's the bottom line based on this chart. Okay, the last chart I'm going to share is the 120 2-hour chart. So what we've got here is how we closed last Thursday, and price, again, confluence on this anchored VWAP level. So the anchored volume weighted average price from April 6 FOMC meeting. This, again, is that confluence level of 2000, and this anchored VWAP from FOMC April 6 is 2003. And I'm just not a fan, again, of buying or selling at this level. So I need distance from this area to be interested. I'm going to take note of the 91.2 on the lower Bollinger and the upper Bollinger at 34. It's not like there's a big spread between the lower and the upper here. And then down below here, relative strength index, 50, 49. Again, that's not an edge here at all. That's right in the middle. So we need to see a 70 or a 30 to really see an extreme opportunity. And definitely, I don't use RSI a whole lot, but I am going to pay attention at a 70 or a 30 reading. But back to the price action. This is a sit on hands with Monday Globex. Observe, watch what Asia is going to do on the Asian open and close, and then, of course, the Europe pivot. That's all I got. Take care. Aloha.